Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for October 9th, 2022. I have a lot to talk about this week because we have the most important data of the month, I think, is the inflation data coming out this week. I'm also going to talk about the non-farm payroll this last Friday. But before I do that, let me just mention, please register for the Traders Summit event October 21st through 23rd. Even if you can't be there, there's a few reasons why you need to register. A, it's free. Okay, to register. B, if you're not going to be there, don't worry, register anyway so you can get the recordings. It takes us usually a day or two to process all the videos, but once we process them, edit them, we'll get them out to you so you can actually watch, even if you were gone for the weekend, because we don't publish those like for another month or two for the public. But it's all going to be relevant because all these speakers that you see right here, they're going to be talking about what's happening right now, current events, giving you their perspective, and also giving you actionable ideas on how to take advantage of what we're doing right now. So make sure you register. But the third reason is going to be our sponsor, 8cap. They're giving away 2 unlocked iPhone 14s to 2 lucky registrants. I mean, you could register and you're automatically registered to win potential iPhone 14. That's pretty cool. So make sure you register and you'll automatically be in that drawing. So do that. Also, I need to mention this. Forex Analytics, I know I've been talking about it the last couple of weeks. We are raising our prices actually on Monday. So on Monday, we're doing it. We're making the switch. It's usually $120 a month for our premium service. You get in our chat rooms and all of our analysis, the mobile app, all of our private shows that we do for our subscribers. We lowered the price to $99 a month just to give you one last opportunity to be grandfathered in, because once you lock in this price, you will be grandfathered in as long as you keep an active Forex Analytics subscription. Then we're going up to $189 a month, and that you won't see these prices again. So take advantage of it. I'm telling you right now, because you guys have known me for years and years. We haven't raised our prices in 4 years, and people that are paying our prices from initially 6 years ago when we launched Forex Analytics are still paying that cheaper than $100 a month. So make sure you take advantage of it. Okay, let's get into the charts, and I will let you know that this analysis is being updated on Forex Analytics throughout the week. And I will not go through these charts. I'm going to go through some charts here so we can talk about what's happening in the markets all in all. But just remember that I do update the basic technical analysis at the end of the day, every day, and then also a lot of intraday analysis that goes out on these charts. So just keep that in mind. But we're going to go through the live stuff right now since, we're going to be talking about what's happening this week. All right. Before I get into this week, let's talk about last week. Let's talk about the data that was released, and let's go over to the jobs data. So as you all know, the non-farm payroll numbers came in better than expected. We created more jobs at 288,000 than the expected 65,000. I think Goldman was looking for a number of 200,000. I was thinking there was a risk that we might print a lower number. We didn't. The market just played right into that, right? The market continued to sell off because now the market isn't expecting a Fed pivot anytime in the near future, which we're going to talk about here in a second. But also keep in mind that the unemployment rate also slipped and went to 3.5%. That's a strong number. The one data that didn't get a lot of attention, but I think it's going to factor into this week, is keep in mind the average hourly earnings year over year came off slightly. Now the average hourly earnings month over month came in line as expected, but that's the inflation data that the market's going to be looking at, or the Fed's going to be looking at. And with inflation data coming, the CPI coming on Thursday, you might see some of this dollar strength pair back a little bit. But let's start with the euro. And we're going to just extend our trend lines from last week. And you can see the euro is just in this very, very strong downtrend. Now, one thing I do want to point out as far as the euro goes, we are at the 618 retracement of this move. So you can see we're very close. I would assume that on Sunday, we're going to test that. So I'm assuming on Sunday, the market's going to open up a little bit lower. We're going to set 97 cents, maybe slightly below that. And I would think that further support in the euro ahead of like this inflation data, you're going to see this high right here, see this low right there. That comes in at the 78% retracement. That's around 96.30. I would assume that that level is going to give us some support ahead of the CPI data. What's going to drive us to new lows in the euro is going to be stronger inflation. Now, the market this week is looking for a year-over-year print of 8.1% on CPI, core CPI month over month 0.4%, and headline CPI 0.2%. So everybody's expecting a little bit stronger CPI data, the core data to be a little weaker. If those figures come in higher, my assumption is the euro is going to trade to new lows. So we are going to trade down to the 95-cent level and possibly possibly below that. But the dollar's got a lot of tailwind strength, if you will, currently, because we not only have a strong dollar, because we have strong data, we also have weak equities. Let's take a look at the S&P really quick and notice that we did close below that 3640 level, just slightly. 3640 has been really key support. That it was our previous low here. We closed basically at it. You could say we're below it. Let me widen up this just a hair. You can see we closed, like I said, below that 3640. But I still stand by the fact that I think this 3600 to 3580. Support is going to be pretty critical. I think that's what we need to be looking at in the market going into this next week. But we'll see if we can hold this support. I think just like the euro, a move below new lows would probably coincide with stronger inflation data. Now, a lot of people believe that inflation has peaked, right? I think we are seeing signs of it, but the question is the Fed going to actually pivot? And I really question that thesis. I don't know if the Fed's ready to pivot just yet. I think the Fed is going to keep rates higher for longer than the market expects, and it's going to weigh on equity prices for probably months to come. But anyway, we are in sell rally mode in the stock market, and you can see the rallies are very short-lived. And one of the things I need to point out here, and let's get rid of this fib retracement level really quick, and I'm going to do a more closer up view of the S&P. If you take a look at the last high that was at the 200-day moving average and bring it down to the most recent lows here, you can see them right there, right? Do you notice that the stock market can't even, and when I say stock market, I'm just going to say the S&P. The S&P can't even make it to the 38% retracement. And because it can't make it to the 38% retracement, I think that is a big risk for the market, because when you have such a shallow bounce like you're seeing here, that usually means that there's a continuation on the way. And to complete the head and shoulder pattern that you see here on the S&P, it takes us down to 3,400, 3,300, depends on how you draw it, how you draw the neckline. You might draw the neckline maybe a little cockeyed, something like that. But the one thing I will say is the trend is down and it is lower, and there's a lot of things that are weighing on the market. And right now it is stronger economic data, especially, if we have stronger inflation data this Thursday, that's really going to weigh on the market. One of the things that we should probably also talk about that's actually on Friday is U.S. retail sales, because how's the consumer holding up in this environment is also going to be pretty important to the market as well. Well, let's take a look at the sterling. Let's move over. I know I went from the euro to the S&P. Let's go over to the sterling. Now, the pound, really the bounce was pretty exceptional. And I have to say it bounced a lot more aggressively than I thought it was going to bounce. But you can see we stalled at a 78% retracement of this whole move. Now we're back below that previous channel support. Frankly, I'm not really too sure how to trade the sterling. I know a lot of people, it's up in the air. A lot of people will tell you that the lows that we saw, that I believe it was an Asian trade that trade to all-time lows, we're not going to see that level again. Then there's people that believe that we will see 90 cents in the sterling. I don't know. And therefore I have not been playing the pound. I will say that we actually on Friday, if you take a look, we actually stalled at the 38% retracement of this bounce. So if you see this bounce right here, we stalled at the 38% retracement. I'd venture to guess that if you want to really look for some pretty critical support for the pound, and if you're trying to trade it two ways, and I think the market, I'm not the only one here that looks at the sterling and says, yeah, I'm not too sure what to do. I bet you the majority of the market feels the same way. Is the BOE going to screw this up, and is the BOE going to be able to save the sterling and the gilt market? I think it's all up in the air. But you'll see the support right here at the 50% retracement. It's also previous resistance. That comes in around 109.20. My assumption is that when you start seeing this uncertainty in the market, what starts to happen is you will see a consolidative type of pattern, whether it's a triangle, it looks something like this, where you start seeing, the pound form some sort of consolidation before you get a break higher or a break lower once data or central banks confirm which way we should be trading. But right now, I think the sterling's going to find some support this week, at least ahead of the inflation data around that 109.20. Let's take a look at the dollar yen. A lot of people speculate that the dollar yen, you're going to see some more intervention with the Bank of Japan. I know that the dollar yen is what the Bank of Japan is looking at, but remember, the world does not necessarily always revolve around the U.S. Now, just because the U.S. Dollar is the reserve currency, the dollar yen is obviously going to be in the spotlight. But I think the BOJ has actually achieved what they were looking for when they intervened a couple weeks back. Is they have provided some stability for the market. And because we have some stability in the market, I'm not sure that the Bank of Japan or the Ministry of Finance is ready to really intervene. Now, I think if we start to get an explosive move higher again in the dollar, like let's say, post inflation data, the inflation data comes in strong, yen gets sold, dollar yen starts to rally, you might start to increase risks of some sort of Bank of Japan or Ministry of Finance action, at maybe higher levels. And if you look at, you look at the dollar yen and you look at where we've been and where we could go. I mean, the upper end of this, previous, it was a channel, but you can see that ascending trend line comes in around 148. And that might be that next area, once you start getting close to 150 yen, where the Bank of Japan, Ministry of Finance, they start talking a little bit, you start getting more rhetoric and maybe even some actual intervention efforts like we saw a couple of weeks back. So that's something else that we should think of. Like I mentioned earlier, the U.S. is not the only country delivering inflation data next week. Actually, on Sunday, we're going to see the U.S. dollar Norwegian krona, Norway's inflation data. That'll be coming out Sunday night, or actually it's early in the morning in Norway. But the reason why I want to bring this one up is because the U.S. dollar Norwegian krona is something that I'm laser focused on right now, because the U.S. dollar Norwegian krona is very much a risk on type of trade. But you can see we have this nice bull flag pattern developed, right? Now we have this breakout point that is right here at 10. Well, I've been saying 1037, but it's actually like 1040. You could just use 10.40 is really the breakout point, but it's 1037. And as long as we stay above that level, it's bullish. But let's think this through really quick going into next week. And if you don't trade the U.S. dollar Norwegian krona or any of the like Nordic currencies, or Northern European currencies, like the Swedish krona, the Norwegian krona, they're very good currency pairs I've found in my experience to trade. So you should try it really small, and that's the nice thing about FX markets. You can start really small and then build your position sizes till once you feel more comfortable trading it. But anyway. One of the influences that Norway has is crude oil, which I'll talk about here in just a second. Anyway, let's say the inflation data out of Norway is a little bit stronger on Sunday night. That then poses a risk of us stalling here at the flag resistance and maybe pulls us back a little bit, and we get towards the middle of this flag. if there's strong Norwegian data. Now, imagine later on this week, if the data is weaker than expected out of the US, then there's a risk of us negating, this bull flag pattern. If we break back through this support here at the 1040 level, that I think is something that we should be thinking of. Now, one of the other reasons why I'm leaning towards Norwegian strength is if you guys have not seen crude oil has broken out, and we've broken, this is a Gartley pattern. Most of you know, if you've been following me in recent weeks, I've been looking for a turn at $75. We got to 76 and a quarter, 76.30, something like that. And we are turning higher towards the 200-day moving average, and we're actually breaking out. So with that breakout, one of the currencies that'll benefit from a strong a strong move in crude is, a huge exporter of crude oil, which happens to be Norway. So with that being said, if crude continues to move higher, that's one of the other things that could weigh, I actually did want to talk about that one a little bit, but that will weigh on Norway, which will give, Norwegian krona a little bit of strength. It might help push it right back down to the base of this crown, or our base of this flag. So something to think about. One of the other things that I do want to mention, even though there's not a lot of economic data coming out of Australia this week, we did close at 52-week lows. Very, very bearish price action in Australia, especially because the RBA raised rates not as aggressive as the market was expecting. So they're already starting to pivot, right? And that's one of the things that when you start looking around and you start thinking, well, has the dollar peaked, and will the Fed actually pivot? And one of the things that's inspiring, it's a word to use, and inspiring the stock market to believe there might be some sort of pivot is when you have other central banks like the RBA stops raising rates as aggressive as they were. So because of that, a lot of people think that maybe we did see a peak in the dollar. Look, I look at the dollar index, and I'm going to go to the weekly chart here in the dollar index. We are at major resistance, right? It's at the 88% retracement of the 20 some odd year range, right? This 20-year range that you can see here. This is a weekly chart of the dollar index. We're at the upper end of the channel, and we had an overthrow. We had an overthrow not only of that black bigger weekly channel, but look at the last couple of years channel in the dollar. We also had a throw over there. So I think the risks are setting up that the dollar is either has peaked, especially if we have weaker inflation data on Thursday. Even if it's stronger data and we get back to 114, I think we are in process of developing a major intermediate top in the dollar. But what would spook the market? Well, and the dollar, well, that would be, weaker stocks. And if you take a look at the Dow, the Dow looks horrible. We're below the breakout point here from, the post-COVID move. The Dow looks weak. The Nasdaq still is trading very weak near its 52-week lows. And the S&P is, obviously nearing 52-week lows too. So, if stocks continue to weaken, that is going to keep the US dollar supported. Now, one last thing I will cover with you guys this week before I also, kind of highlight some of the other data that's coming out this week. Gold. Remember, gold had a false breakdown, but we are above that 1680 level. And while we're above 1680, 1690, I would be a little nervous being on the short side of the gold market. Now, the gold did turn, and gold did turn because of the economic data that we got on Friday. That is a true statement. All right. But the flip side to gold is if we break above the 1730 level, I think it's 1735. Well, let's just move. Let's put this in here right here. If we break above that, that would be very bullish. Oh, you know what? There is one other thing I need to talk about. So make sure you guys stick around. So, if we move higher from here and we break above that 1730, then you have like an inverted head and shoulder pattern that would look something like this, right? Here's your shoulder, head, shoulder, something like that. So watch gold. I would not rule out gold, especially after this big false breakdown, divergent relative strength. I think gold still looks very constructive. That is also one of the reasons why that if you are a dollar bear, you've got to be watching gold, because gold is supportive of that thesis, right? All right, one last thing we should look at. Let's look at the 10-year futures, or we can use the CFD. Whoops, that's not what I want to look at. Sorry, U.S. 10-year. Let's take a look at yields here. You know, it looks very similar to the dollar index, right? But I think yields. This is really very. Let me delete this channel. This is an old channel. We don't need that anymore. I think this is pretty obvious right now as far as yields go. While we're above 350, you know, it's bullish. There's a breakout point, bull flag pattern. How do you want to draw your flag? Do you want to draw your flag like that, like this, like that? You know, hey, any which way you slice it, while we're above 350, yields are stronger, right? And it is bullish. But what drives us higher from here, what drives yields higher from here is going to be inflation. So if inflation continues to be strong this week, that is what's going to push yields higher. And obviously the dollar, which is pretty much a derivative of what's happening in the 10-year, you know, match those up. You can see it looks, you know, exactly the same, right? For the most part, there's the dollar index overlaid. You know, so if yields break out higher, the last place you're going to want to be is short dollars. And that's something that you need to think about. All right. So some other things that are happening this next week. So we have FOMC meeting minutes. Remember, they're going to be stale. They're from 2 weeks ago. But have we seen any data that's really going to alter what the Fed's thinking? I don't think that if you're looking for some key words that might suggest that the Fed is ready to pivot in the minutes, might be waiting for a while. So we do have earnings they're kicking off this week. Like I said, we have inflation data, some other data that might be coming out. Well, that is coming out that we need to pay attention to. We do have producer prices in the U.S., which is going to be on Wednesday. It's a precursor to what we get on the CPI that's going to be on Thursday. We have Chinese CPI that's going to come out. That is coming out on Friday, and I believe that's Friday night. Or maybe it's Thursday night. Let me double check that really quick. While I'm double checking that, remember we do have I just said new. I almost said New England. We have we have Norway inflation data on Sunday night. So just keep that in mind if you guys want something to like really cue in on, to cue into. You know, that will be that. Now, Chinese inflation data is actually going to be Thursday night, so it's Friday morning data. Keep that in mind. And then, you know, one last thing. Here's a little, for those of you that stuck around this whole time, I'm going to give you a little bit of something extra. Now, before I do that, make sure you give a thumbs up. If you like these videos, you like these week ahead videos, if you think they help you going into this next week, kind of prepare for the next week, give us a thumbs up. I like it. Our team likes it. It makes us feel good. I mean, it is Saturday morning for me right now, and I'm filming this for you guys, and it's free. So if you like it and you appreciate it, you know, and subscribe to the channel. It's free. Also, but you know what else you should do? You should check out the Trader Funding Program. I'm going to be doing an interview early this next week of our biggest payout yet, and to one of our traders, and we're going to talk about what he's learned going through the process in the Trader Funding Program. So make sure you check out the Trader Funding Program if you want to learn how to trade our money, right? And not your own money. You don't want to risk your money. You get to keep 75% of the returns. So, you know, you don't take any of the risk. So if you want to learn more about it, watch the video right here at the top. All right, here's your extra something special. You guys know I've been leaning on the dollar MEX, and it's a little risky at this point because stocks are moving higher. So the dollar Mexican peso, theoretically, stocks are moving lower. When stocks are moving lower, the dollar Mexican peso should be rallying. But guess what? It's not. But I also cannot ignore the fact that the dollar Mexican peso has some really, really critical support around the 1950 level. You can see major support down here. And so, you know, a lot of people get nervous, rightfully so, being on the short side when you're at levels that have not been breached for like literally 2 years. But I think longer term, the Mexican peso is a currency you want to own. I believe that we're seeing a big shift globally away from China and doing manufacturing in different parts of the world. Mexico is going to be a beneficiary to those for North American countries. So I think that the dollar Mexican peso is going to eventually break down and trade down towards the mid-teens, whether it's tomorrow or whether it's next year. I don't know, but we'll be watching it rather carefully because I believe it's something that is brewing longer term. And this is something that I try to play, especially when you get situations where stocks, let me move this over really quick. If you get the stock market, like the S&P moving higher, or excuse me, moving lower, typically what happens is when the S&P moves lower, let me remove that really quick and zoom, right? Typically, when the stock market moves lower, okay, the dollar Mexican peso is going to go higher. And you saw it here during the COVID crisis or COVID pandemic. You saw the stock market sell off, dollar Mexican peso ripped higher. And that's common whenever you get a stock market sell off, dollar Mexican peso will move higher. Well, what happens when stocks sell off and the dollar Mexican peso does not? Then if we do get a bounce in the stock market, especially heading into the fall where you start to see the, maybe some seasonals kick in and stock market recovers a little bit, what happens to the dollar Mexican peso? Does it actually move lower at this point? And that is something that I think everybody needs to be thinking about. Now, why is this week really important? Well, we do have out of Mexico, we have industrial production numbers on Wednesday. And then we have monetary policy meeting minutes on Thursday. And then obviously the inflation data. And I'll tell you, in my opinion, if the inflation data comes in weak, which that's going to benefit stocks. A weaker inflation will benefit stocks. Stocks will move higher and they'll bounce. Well, then I think one of the best trades out there for me is going to be short dollar max. Now I'm already short and I'm already playing into that, but it's something that I want to aggressively be short is dollar max at some point. So if stocks actually start to recover because this inflationary data starts to weaken and people start saying, oh my gosh, maybe we're seeing so much disinflationary data that we might see a deflationary type of environment moving forward and the Fed's going to have to pivot. If that is the case, the Mexican peso is probably going to be one of the better beneficiaries in all of the FX market. So guys and gals, I want to say thank you so much for spending your time with me. I hope you have a great weekend. And remember, take advantage of the Forex Analytics price because these are prices you will not see ever again. All right, thanks. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.